Bitcoin's ETF inflow just hit around 1.4 billion in mid-January, but on Solana, institutions just pulled around 3.6 billion in 2025 alone. This unusual flow suggests that institutions are not leaving Bitcoin in this bear market. Instead, they are rebuilding around it. Let me ask you an uncomfortable question here. If Bitcoin is really the digital gold, why are the same institutions are buying Solana and XRP ETFs? The reason is not they are doing any speculative activity, they are focusing on the infrastructure. Today we are trying to map around 12.7 billion capital rotation that's happening on the plain side. In this video, we will look around 3 institutions that triggers one altcoin with 1000% inflow spike. And we are explaining why this is not a bearish sentiment for the Bitcoin. Let's start with one of the most important break in the narrative that Solana saw around 1000% year over year institutional inflow growth in 2025. That's around 3.6 billion in regulated capital moving into the Solana. But here is what that really get uncomfortable for the Bitcoin maxis. The Morgan Stanley, the US first major bank, just filed for the Solana ETF in 2026. That's last month, January. They are not focused on Bitcoin, literally Solana itself. And this flow suggests that it's not rotation out of Bitcoin, it's actually a new portfolio construction. The real trigger that played here is that the regulatory clarity. On September 2025, SEC approved a generic listing standard for crypto ETFs. On October 2025, the first Solana ETF just launched. On November 2025, XRP ETF just hit around 250 million in the first day of ETF launch. And July 2025, Genius Act just created Federal Stablecoin Framework. Historically, this law leads to 6 to 12 months window where institutions can build positions before the retail catch up. Currently, we are in a month 4. If you want to learn more deeper in the compliance perspective, you should need to look into the XRP. Actually, XRP is the compliance study we need to look into. After years of SEC litigations, the legal clarity created 500 percentile inflows surge into XRP and 3.7 billion in 2025 alone. Franklin Templeton's XRP ETF alone took in around 1.07 million in January 2026. Why this matter for you in a portfolio? Thing is that institutions pay for certainty. Bitcoin has it and Ethereum has it. Now SRP and Solana has it. Okay, let's do some stress test on this thesis. Before we are getting to this thesis, I will be wrong if Bitcoin ETF outflow accelerates beyond 500 million weekly for 3 consecutive weeks. 2. Altcoin ETF launches failed to hold around 1 billion AUM after 90 days. 3. The Clarity Act stalled in Senate committee past Q2 of 2026. Here is what the data shows so far. Bitcoin ETF flows are volatile but still net positive. 1.2 billion inflow in start of January and 1.42 billion in mid of that month. Solana ETF just launched 3 months before and it is still accumulating. And Senate crypto hearings are just scheduled for upcoming weeks. The base case still holds, but the margin of error is still tightening if anything will happen. Let's do the deep dive on this chart to get much more understanding. I'm putting down here the institutional allocation map for 2020 through 2026 here. On 2020 to 2023, Bitcoin is dominated and 95% of the crypto ETF proposals happened there. On 2024, Ethereum ETF just launched, 12.7 billion inflows by end of 2025. And on 2025, the altcoin ETF wave just began. Solana, XRP, Chainlink, etc. Now in 2026 Q1, Morgan Stanley, Franklin Templeton, Grayscale all are filling the multi-assets products right now. You can notice a pattern here. Institutions are not chasing the pump. As you know, this is a bear market. They are building the infrastructure first. And here is why this is not bearish for the Bitcoin, even though the altcoins sentiment is going up. Total crypto market cap is around 4 trillion and Bitcoin's share is still 54%. That means capital is still not leaving from Bitcoin. It actually expanding the addressable market by including the altcoins. You can think of it like a 2000s. Microsoft didn't die when the Google launched. The actual thing happened was internet just got bigger. Let me look into the one more data point, the Chainlink. Bitwise just launched Spot Chainlink ETF in January 2026, the last month, and they introduced 0% management fee for 3 months. Why does this matter? Chainlink is not a store of value or a payment rail. It actually an infrastructure for the smart contracts and it is plumbing. This signal of institutions buying Link is that they are building the DeFi infrastructure, not just speculating. This will clearly tell that Wall Street is always buying the tools, not just an asset. And this shift is already structured. Now here is the probability framework for Q1 and Q2 of 2026. The bull case is that it has 3% probability. The Clarity Act will passes by March and Bitcoin will stay up to 95k and altcoin ETFs inflow just exceed to 10 billion by June. And next one is my base case, the 55% probability. Bitcoin will consolidate around 85 to 100k and altcoin ETFs just pull around 5 to 7 billion and the regulatory clarity will drag into Q2. And at last the bear case, it has around 15% probability according to our math. In this situation, we will show a macro shock here, like the tariff escalation and Fed pivot. In this case, Bitcoin will stay below 80k and altcoin ETFs liquidation just begin. The highest conviction trade here is that institutions are not dumping Bitcoin for altcoin, they are rotating capital into diversified crypto portfolio for the first time. If you are holding cash and waiting for that 20% correction, you are betting against 12 months of institutional infrastructure build. The question is not about if this continues, it's which asset will capture next 50 billion. I think this thesis is helpful for you. If you like this type of content, don't forget to subscribe. I will be coming up with new thesis and new macro analysis in this channel. Stay tuned. See you in the next one.